Shopify stock, ticker symbol SHOP. This week Shopify did a stock split of 10, meaning one stock is cut into 10 smaller pieces. This doesn't change anything about the valuation, but is just more accessible for the broader audience. And since Shopify stock is down more than 75% year to date, it's the perfect time to do an analysis about this company. So is this also the perfect time to buy Shopify stock? In this video I'm going to show what Shopify does, a quick view at the historical stock price performance, the fundamental analysis, the major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Shopify do? Shopify offers an e-commerce platform primarily focused to small and mid-sized businesses. The firm has two main segments: subscription solutions and merchant solutions. The subscription solutions segment allows Shopify merchants to conduct e-commerce on a variety of platforms, including the company's website, physical stores, pop-up stores, kiosks, social networks, and Amazon. Merchant solutions are add-on products for the platform that e-commerce and include payments, Shopify shipping, and Shopify Capital. For Shopify, it's highly important that e-commerce is growing, and in this graph we see that e-commerce growth is normalizing as a percentage of retail sales. Shopify also did acquire Deliver to simplify the fulfillment, which is a great thing and makes it more easier to customers and merchants to ship their product. So I think this was a great move and it will add a lot of revenue in the future. And now that we know more about the company, it's time to check the historical stock price performance to see what happened with the Shopify stock in the recent periods. Since Shopify is such a unique company, I decided to include the S&P 500 of course as a benchmark, but also Salesforce, ticker symbol CRM, TWLO, ticker symbol TWLO, and Snowflake, ticker symbol SNOW. So the first thing that you should know is that all these companies are considered growth stocks, meaning highly volatile and long-term play. The S&P 500, which I use as a benchmark, is more steady and consistent. Well, here we go. Shopify has a 265% return on the 5-year chart, which is quite impressive, especially since the S&P 500 did return 72%, including dividends. So you easily beat in the S&P 500 with owning Shopify on the 5-year chart. But please see the difference between the orange line and the blue line in the graph, which represents Shopify and the S&P 500. There's a big decline in Shopify's return. CRM and TWLO also beat the S&P 500. Snowflake didn't have a fully 5-year chart, but is still down 43%. On the 1-year chart we see that Shopify is down 78%, while the S&P 500 is down only 10%. CRM and Snowflake are down roughly 30 to 40%, and TWLO is also down 78%. All stocks are down quite a lot compared to the S&P 500. On the 6-month chart, we see that Shopify is down 77%, while the S&P 500 is down only 19%. All other stocks are also down from 30 to 70%. The last chart, the 1-month chart, we see that Shopify is down 13%. The S&P is down 6.6%, CRM is down 4%, TWLO is down 18%, and Snowflake is the only one being up with 15%. So my conclusion here is that you can get some great returns with owning these stocks in the long run. But when there's a bear market, bad news, or change in the fundamentals, these stocks are hammered down. So it all comes down to, do you have the stomach to hold the stock during volatile times, or do you prefer steady but lower returns with the S&P 500 for example? Let's find out if Shopify is a buy based on the fundamentals of the company. So Shopify is a 39 billion market cap company with a PE ratio of 218, which is very high to say the least. So after a 77% drop, you still pay a premium for the stock. So what does this mean? Does this stock need to drop another 75%? Later in the video I will give you my price target, so make sure to watch until the end. But first, let's check the other parts of the company. Shopify has a 12 trailing month revenue of 4.8 billion. In this graph we see that it's going up quite nice and consistent, so this comforts me a lot. And earlier in this video we saw that e-commerce is growing also a lot. So we can assume Shopify will benefit a lot from this growth and revenue will continue to grow in the future. Net income is sitting at $181 million and Shopify just became profitable late 2020. This also clears up the high PE ratio they have right now. With the revenue sitting at 4.8 billion and net income sitting at 181 million, we get a profit margin of 3.8%, which is significantly lower than the 5-year average. So keep an eye on the profit margin. You want this number to be above 10%, and right now it's too low in my opinion. It's the same story with the EPS. You want them to grow steady and consistent, so keep an eye on that number as well. Next up is return on assets, which is sitting at 1.1%. Return on equity is sitting at 1.7% and return on invested capital sits at only 2.1%. The 5-year average is 1.2%. So I think we can all say these numbers are too low. You want these numbers above 10%, so this doesn't really look good to me. And for a big growth stock, it doesn't really that matter if you have a high valuation as long as other parts of the business are performing on the top level, such as revenue growth but also return on invested capital. So this is something I really don't like about Shopify. Next up is the balance sheet. Shopify has 7.2 billion in cash, but only 350 million operating cash flow and 408 million levered free cash flow. Debt is sitting at 1.2 billion and compared to the cash flow statement, this debt is too high. But to be honest, I don't think this is such a big problem, since Shopify need to use debt to grow the business. So personally, I don't think this is a red flag or anything. But it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to do acquisitions, buy back shares, research and development, and even dividends, which Shopify doesn't pay right now. In this graph we see that free cash flow is up quite a lot, which is of course related to the profits. So if they continue to grow in this way, I think they are doing fine. And as I told a second ago, free cash flow is also used to buy back shares, which is very important for a company since this will increase the EPS, which attracts other investors and increases the stock price. In this graph we see that Shopify did issue a lot of new shares back in the days. But most recently they bought back some shares, and I think this is the perfect moment to do so. A lot of companies issue new shares to raise capital and grow the business, and so did Shopify. But by doing this you are also diluting the shareholders, so investors don't always like new shares pumped into the market. Personally, I don't blame Shopify for issuing new shares back in the days to grow the business. And right now they are buying back shares, which is the best thing they could do in my opinion. This will increase the EPS and lower the PE ratio as a result. And now that we check the fundamentals of Shopify, it's time to compare them to the major competitors. Again, I decided to include Snowflake, TWLO and Salesforce. Based on market cap, Salesforce is by far the biggest. When checking the valuation, we see that all companies have a high PE ratio, or don't even have any right now, which is typical for growth stocks. What's more important right now is the revenue growth. Snowflake has the highest revenue growth year over year and also the highest 3-year revenue compound annual growth rate. Shopify is doing very good with a 60% compound annual growth rate on the 3 and 5-year chart. TWLO is doing very good with the same 60% and CRM is doing 25%. Leveraged free cash flow compound annual growth rate is the highest at Shopify, with almost 200%, which is quite impressive. CRM does have the highest gross profit margin, but net income margin is the highest at Shopify, especially when we check the 5-year average. Free cash flow margin is the highest at Snowflake, but since free cash flow is growing in high amounts for Shopify, I think they will do fine. Return on equity is the highest at Shopify, and it's the same story with return on assets and return on total capital. All companies seem to have low numbers here, and Shopify does have the best numbers here compared to the others. All companies seem to have similar cash compared to the total debt, so there's no big winner here for me. The last part of this video is about the price targets I have for Shopify. I'm using the Everything Money software to come up with 3 price targets based on low, mid and high assumptions. I'm using the 1-year average, 5-year average and 10-year average numbers to come up with these assumptions. On the low assumptions I'm very conservative and expecting growth to slow down a bit. With the high assumptions I'm expecting growth to be the same and in some cases even higher. With the mid assumptions I'm literally in the middle of the low and high assumptions. Right now, the stock price is at $31. Based on my assumptions, I have a low price target of $14 to $20 a share. With my mid assumptions, I have a 34 to 37 price target, and with my high assumptions, I'm having a 66 to 71 price target. So if you believe the mid or high numbers, Shopify is the buy based on these assumptions. But to be honest, I think I will go with a low to mid range price target because I think they will continue to grow from here, but not in the same way as they did before. I expect things to slow down just a little bit. So my final conclusion with this stock is that I think it's a great company. The stock does have its interesting parts, but also some things I don't like. Since I'm sticking to the low and mid price target, which is between 20 and 37, a big range to be honest, I think I will wait for this stock to come down just a little bit, to create a better margin of safety. But I do think when the price is right, this stock is a buy, since they have this future-proof business and e-commerce will continue to grow. And with the current market, I think Shopify will continue to fall down in stock price, and you can enter at lower prices. So for now, I'm waiting, and when the time is right, I will definitely hit the buy button. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.